Good evening, everyone. This is Mr. Maduna. I'm going to be with Mr. Mdleje. This is our last session in June 2026. We will see each other in term three, where we will be looking at the topics in term three, which is your budget and your VAT. But for today, we are revising paper two. Welcome to this session. Please inform other students as well to come and join, since next week in KZN we are writing paper two. We hope that you enjoyed paper one today. Yes, it was a very long paper, but then I'm sure you have now trained yourself on how to complete the accounting paper in 2 hours. So we hope you enjoyed today's paper. I'm going to start the lesson. Today we'll start with, we'll shoot straight to our questions. So we're going to start with our um, cost accounting. So we are not going to be doing explanations. If you need more explanations, they are available on what is called YouTube. So if you go to YouTube channel, that is where you are going to get the recordings of all our previous lessons, where we explain to the students, to the teachers, and whoever is joining our sessions, we explain the concepts, we explain the content under each topic. So if you go to YouTube, you are going to get those lessons which are recorded. So today we go straight to question three. Just in case you have network problems, the paper that you are doing is going to be May, June 2024. So please download that question paper. And if you have a hard copy of that question paper, please also do it. After this lesson, no, after this topic, I am going to do inventory valuation, and Mr. Mdleje is going to be doing the reconciliations. All reconciliations, that will be your debtors, your bank reconciliation, as well as the creditors reconciliation. Okay, so to start, we have question three here. It is 40 marks. As you notice, that's in accounting. Each topic you are given that you must at least spend 30 minutes here. Each topic you are given the minutes that you must spend in each question. So you should try and follow this time that is allocated to each question, so that you know that you are following the right track, and also you are completing your accounting paper in 2 hours. So choose a cost category from column B that matches the example in column A. Write only the letter A to D next to the question numbers 3.1.1 to 3.1.3 in the answer book. Now, when you look at 3.1.1, it says delivery expenses. And then here, we're looking at the cost category. So under delivery expenses, you know that it falls under selling and distribution. That's where we deliver the goods that have been completed. So our answer for number one is B. Okay, the cost category here will be B. Okay, then office stationery, we know that you can associate that with administration. So our answer for number two is D. And we're looking at the next one, salary of the factory supervisor. Salary to the factory supervisor, that will be factory overhead cost. So our answer will be A for this one. Then we move on to the next question, where we are asked to look at NADU manufacturers. We are going to be looking at the factory overhead cost. So here is the question. The business manufactures uniforms for construction workers. The financial year ended is 29 February 2024. Required. Calculate the correct factory overhead cost by taking into account the errors and omissions. We calculate the correct factory overhead. We are not preparing the new factory overhead notes here, but we are correcting the one that has been completed already, and we are going to take into account that there are errors and omissions that are listed here, and we fix those errors. What is the difference between an error and an omission? We know that in accounting, we have in paper two, it's managerial accounting. So we are focusing on correcting errors, taking decisions for the businesses, and so on and so on. So here, when you look at an error, something has been done, but erroneously. So when you correct it, when you do this, you first have to correct an error, and you must do what was supposed to be done. And omission An omission is when something has not been recorded at all. It has been omitted. So that is called the omission. So that is the two. That is the difference between the two words here, which says errors and omissions. Okay. Now, since you are not completing the new factory overhead cost, this is the information that you are going to use. The bookkeeper calculated the factory overhead cost as 258,200. As I told you here that this has already been completed, the factory overhead cost. So we have 258,200, which has been completed, but these are the following errors and omissions which were identified and they must be taken into account. Now, we have number one, water and electricity. It was omitted from, remember, omitted. So it's not an error. So once it says omitted, it means that it has not been recorded at all. So here we are not correcting an error, but we are recording something that has been omitted by mistake. So it was omitted from the factory overhead cost. So we say it's here, 75% of this expense must be allocated to the factory and the remaining 25% to the administration cost. 9,600 was correctly allocated to the administration. Now, we are given here that 75% must be allocated to the factory, whereas 25% must be allocated to the administration, as it is saying here. But we are given the amount of 9,600, which was correctly allocated to the administration. This amount, which is 9,600, is equal to 25%. This amount is equal to 25%. So what are you going to do in order for you to calculate the amount that must be recorded in the factory? You are going to use what you have. When you have 9,600, which is 25%. So it's not the entire amount of the water and electricity. That is why our calculation will not be 9,600 times 75 over 100, but it will be 9,600 multiplied by 75, because what 75 is what we are looking for, which is water and electricity, over what? Over 25, because 25% is what is given. So this is how we are going to do it. 9,600 times 20 times 75 over 25. And then you get 28,800. So this is what you're going to do here in your calculation. Water and electricity. Water and electricity, you must correctly write the name of the expense you are talking about. 9,600, which was allocated to the administration, which is 25%. Here we're looking for 9,000. We're looking for 75%. So 75 over 25, because this amount was 25%. And then I'm getting 28,800. 28,800. This is adding to this cost. I'm going to add to 28,800 to the factory overhead cost, because this is the cost. So 28,000, remember, it was not recorded at all. So we are now going to add with Ubani the incorrect amount, which was calculated by the bookkeeper. The next one is going to Roman figure number 2. The total rent expense. We are given the total here as our rent. It is 142,800. Was recorded in the factory overhead cost account. Remember this one. Or let us read again this one. It was recorded in the factory overhead cost account. So it means whatever that we are going to do here, we will be correcting an error. Now, let us read what is it that was done. This should have been, now this tells us that an error was committed here. This should have been shared according to the floor area as follows. It was supposed to be factory 220 meters squared, sales 120 meters squared, administration 80 meters squared. In total, the floor space has got 220 plus 120 plus 80. The floor space has got 420 meters squared in total. But this floor space is shared with the factory, sales, and administration. But our bookkeeper, what they did here, they recorded the total amount of this rent expense in the factory overhead cost, whereas this amount is supposed to be distributed to the factory, as well as to the administration and the sales department. But the amount was added in the factory overhead cost. Now, what is it that we are going to do here? So which amounts are added by mistake so that we subtract them? The two amounts is the sales department amount as well as the administration amount. Now, how do you calculate them? We can just add 120 and 80 laphayana. If you add 120 and 80, you get 200 meters squared. So you must subtract that one. So 142,800 multiplied by 200 meters squared, because this is for sales and administration. Then you divide this by the total floor space, which is 420 meters squared. And then you are going to get 142,800 multiplied by 200 over 420. Then you are going to get 68,000. So 68,000 is the amount that should have been recorded in our factory, and not or the amount. So and not the amount for sales department and administration. So let us calculate the amount that should have been recorded for factory. So 142,800 minus 68,000. Okay, the amount 142,800 minus 68,000. I'm getting 74,800. So this is the amount that should be subtracted, laphaya. And then this amount should be left. This is the amount for factory. This is the amount for factory. So this is the amount that should be subtracted, because this amount is for sales department and administration department. So when you go to your factory overhead cost note for correction, you are going to write laphayana rent expense. Then open your brackets and calculate 142,800 multiplied by 200 meters squared for sales department as well as for administration department. So times 200 over 420, which is the total floor space. 142,800 times 200 over 100 and over 420, I'm getting 68,000. What do you do with this 68,000? It must be subtracted. You show that with a minus, depending on what the instruction says, or you can show the brackets to show that you are subtracting this amount. Why are we subtracting it? We are subtracting this amount because it does not belong to the factory overhead cost. This amount is for selling department as well as for the administration department. Roman figure number 3. Roman figure number 3 is about insurance. It says insurance expense is 48,000. Was allocated to the factory. In error, using the ratio of 4:2:1 instead of ratio of 5:2:1. The correct ratio here is 5. This is the correct ratio. But when we're recording, this is the ratio that was used. So already we allocated laphayana, this amount, which is 48,000, was allocated to the factory. So this amount, we can agree that it is 4 out of 7. This 48,000. So let us calculate, because this is not the insurance amount is not the total, because it was already allocated to the factory. So we know that as this is allocated to the factory, it is 4, because they use the wrong ratio of 4:2:1. So multi 4 plus 2 is 6 plus 1 is 7. So the total that should be there is 7. So let us calculate 48,000. Calculating the insurance amount in total, 48,000 multiplied by 7, because we're going back, over 4, because this amount is 4 now out of 7. So multiply 48,000 times 7 over 4, I'm getting 84,000. So this is the total amount of the insurance. But the ratio that was supposed to be recorded is 5:2:1. Then let us reallocate it and say times 5 out of 8, because 5 plus 2 is 7 plus 1 is 8. So times 5 out of 8. So 84,000 multiplied by 5 out of 8. 84,000 times 5 over 8. I'm getting 52,500. In fact, this is the amount that should be in our factory. That should be added in our factory, 52,000. But they've added 48,000 only. So this is what you need to do, Lapana. So Tina, when you are looking at your insurance, because I said the amount that should be there is supposed to be 52,000. So let's add the amount that should be there, which is 52,000, supposed to be 52,500. And then subtract the amount that was not supposed to be there, which is 48,000. Then you are going to get the amount to be added. 52,500 minus 48,000. So we need to add a further amount of 4,500 because already 42,000 is part of our factory overhead amount. And then afterwards, you can total because you are done. There are no further expenses. After this, our factory overhead cost will be correct. So 258,200 plus 28,800 minus 68,000 plus 4,500. And then I'm getting 223,500. So this is going to be my answer for my factory overhead cost note. Remember, it's a correction. We were not redoing the factory overhead cost. Now, here is my production cost statement. Let's read what the question says. The question under 3.3, it says completes the production cost statement for the financial year. This is 10 marks. Now, it is very important for you to remember the structure of your production cost statement. Now, the structure of our production cost statement, we're starting with money or direct material. I know some papers will start with prime cost, so that is fine. But we know that here, firstly, you can have direct material, and then you have direct labor. All that is known as your prime cost. So direct labor cost. All right, and then all other details are given. We also have factory overhead cost. Let us record factory overhead cost because we just calculated it. The amount for our factory overhead cost was, this is the amount, was 223,500. So it must be added, 223,500. And then afterwards, we are going to look at the missing details here. They also have a working process where we're at the beginning. So when you add your total manufacturing cost, you add your work in progress on the 1st of March 2023, you are going to get the total value of the goods available to be produced. And then you don't have to write that, Lapayana. And then on this one, second last, you're going to write work in progress. It's the end, or you can write the date on the 28th February 2024 or 29th February 2024. All right, this is subtracted. Now it's important for you to record this because you will know where to put brackets and so on. So in the production cost statement, there is only one place where we are going to show brackets. It is work in process at the end of the year. Now let us go and look at the information. The first part was direct material cost. This is the information that you are going to use. Information B, which is about raw material stock. Stock of raw material. In this case, it's fabric. So that means we are producing. They said they are producing uniforms. So was transferred to the factory using the FIFO method. We're using the FIFO method. Stock record revealed the following. Okay, here is what we are going to use here. Remember, we are using a FIFO method here. So it means when we're transferring what? When we're transferring in our goods to the production. Stock of raw material transferred to the factory is valued using FIFO method. So stock record revealed the following. Now here is the stock opening, is our purchases for June and October. Then we have total fabric available. But what we have sent to the factory was 59,500 meters. Now, meters was 59,000. We want the value of these meters that were sent. So we are going to make use of FIFO method to calculate. Now, there are two ways in which this can be done. And I want you to listen attentively on this one because it can be very tricky if you are not going to listen. And we may end up doing wrong things here. Okay, let us start with this one here. The first method that you can use is for you to get the value of your closing stock. The value of your closing stock, because you are given as you can see here, you are given the total available, the value of the total fabric available. Here it is 823,600. So you can use FIFO to calculate the value of the closing stock, and then you subtract it with this amount. Then you would have gotten the amount that you are looking for, which is the value of the issued, to the factory, issued fabric to the factory. Now let us calculate what is the fabric that is on hand. So you can say 70,000 meters minus 59,500 meters. And then I'm getting 10,500 meters. This is the closing stock. This is the closing stock. Now let us use FIFO to calculate the value of this closing stock. Now if you use FIFO to calculate the value of closing stock, remember, we make use of this method, which we call it fish method, when you're using ubani FIFO. Now, you would say, as you're using ubani FIFO method, there are no returns here. You say, the 20,000 units, all of them here, they are in stock. No, they are not sold. Sorry, not all of them, but part of this 20,000 meters of fabric was not sold. So you can just say this amount, which is your 10,000, was all not sold at the end of the year. So because we have got to 20,000 here, then you can multiply this amount by 12,20. Then when you say 10,500 times 12,20, I'm getting 128,100. Now this is going to be my value of the closing stock. Value of closing stock. Now I have available, which is 823,600. Then I subtract the closing stock here so that I can get the value of the units that were sent for production, minus 128,100. So when you do this, you can say 823,600 minus 128,100. I'm getting 695,500. Then you can take this amount and say this is your 695 is your direct material, 695,500, because you said here 823, because the first calculation was 10,500 multiplied by 12,2, and then you got 128,100, which is your closing stock. Then your available, which is 823,600 minus 128,100, and your answer is 695,500. This is an easier method. There is another method which you can make use of here. Now, another method that you can use will be this one, okay? Which is going to give you the amount that you are looking for. Okay, because you are given 59,000. This is your issued for production. 59,500, it is given, okay? Not closing stock, but your material issued for production. Then when you look at this figure now, you will say, you start from the stock opening, because you are looking for what has been sent to the production, not what has been in the closing. So that means that we sent 8,000 meters squared. So can write 8,000 here, which was sent meters, multiplied by 10,5, right? That is going to give us, if you say 8,000 times 10,5, it is going to give me 84,000, okay? Then you will say, how much are the units left now? 59,500 minus 8,000. I go to 51,500 still left. So it means the following unit here is 42,000. So it also means that all 42,400 was sent fabric, okay? Now, how much is the value of 42,000? 11,80. So multiply this by 11,80, and then you'll get the amount you're looking for. 42,400 multiplied by 11,8. I'm sorry, it's 42,000 only, not 42,400. Yeah, it's 42,000 only here. 42,000 multiplied by 11,8. I'm getting 495,600. 495,600. That is the amount I'm looking for. Okay, 495. 600. And then you say now, let's just calculate how much is left in what was said. Minus 8,000 minus 42,000. Okay, it's 9,500. So this 9,500 is from this October. So 9,500 multiplied by 12 rand 20. Then 9,500 times 12,2, it is giving me 115,900. Then when you add all this, should give us that same amount plus 84,000 plus 495,600 plus 115,900. It is giving us 695,500. The same amount we got when we were calculating our direct material. So it is up to you which method to choose, but I find this one very easy because it does not have too many calculations. Remember that in accounting you are also trying to fight with time. Okay, then we also have direct labor, but there is no need for us to calculate direct labor or to be given information about direct labor because we are given prime cost. We have already calculated direct material. Now you see that direct labor will be a balancing figure here. There is no information, by the way, to calculate direct labor. So we can just calculate it using this information. This is our answer. When you add direct material plus direct labor, it gives us 1,405,000. So it means that you can take 1,405,000 and minus, sorry, I'm doing it in the wrong space. I must do it direct material, direct labor cost. Okay. So it's 1,405,000, which is our prime cost. Remember, this prime cost there is an amount for direct labor minus 695,500. Then you close your bracket. 1,405,000 minus 1,405,000 minus 695,500. I'm getting 709,500. So this is the amount for the direct labor. Okay, no information was given. So you just have to use your answer sheet sometimes because in your answer sheet, there are amounts that are given. So don't stress yourself looking for information that speaks to the direct labor and so on. Also inspect your answer sheets because some figures are written for you in the answer sheet. Now, we can calculate our direct material cost by saying prime cost of 1,405,800. Plus 223,500. This is going to give me my total manufacturing cost. 1,405,800 plus 223,500. It is giving me 1,629,300. And then when you add that to 30,700, you are going to get 1,660,000, which is going to be your total production available to be produced. Okay, total cost of production available to be produced. All right, and then no working process. We have two unknowns here. Let's go and look at our answer book. What is it that is given that will lead us in getting either working process or cost of production of finished goods? Okay, now we have information C. Information C, we are given working process at the beginning is 30,700, and it's already recorded here, as you can see. This is our working process at the beginning, but the working process at the end is not given. There is a question mark. Now let's go and look at information D. Information D says 20,200 uniforms were produced during the year at the cost of 79 rands per uniform. Okay, this question continues. I'm sure there is another question. Okay, it's another business. Okay, it's not the one that we are dealing with. Okay, now we can take this 20,200, multiply it by 79, because this will give us the total cost of production, the one that we are looking for here. So it says 20,200 multiplied by 79. You close your bracket. So 20,200 times 79 rands, it is giving me 1,595,800. And then you can look for the difference here. Since we are going up, looking for working process at the end, you can minus this amount here, which is 1,660,000. When you subtract it, you will get negative 64,200. That will be your working process at the end. All right, moving on to the next one. Then that's how you get your 10 marks. That's how you get the 10 marks for working process. So there are many ways, in fact, that you can use to get your cost of production of finished goods. Sometimes you will be required to maybe draft roughly your finished goods. You may be required to do that. For example, if you are given cost of sales, so that means you are given finished goods, balance at the beginning and balance at the end, as well as cost of sales. Those three amounts, they will help you to get your cost of production of finished goods. How? You will take your balance at the beginning, if it is given, balance at the beginning for finished goods, right? You record it here. And then afterwards, you have your cost of production of finished goods, the amount that you are looking for. We don't have it here. And then you have your balance at the end, or your closing stock, your balance at the end, or your closing stock, which is negative, right? And then you have your cost of sales as your answer. Some teachers will teach you that your balance at the end must be the last item here, but it doesn't matter. You can have your balance at the end as the last item, or you can have your cost of sales as the last item. So it doesn't matter. Some books or study guides, they do it like this anyway. All right. Either way, if you have got your cost of sales here, you will subtract it as well. Okay. Now, you've given your balance at the end, right? And you are given your cost of sales, or you are given sales and you are given your markup. Calculate cost of sales, record it here. Now you see, you have only this one amount here now, which is missing. You can calculate it by taking your cost of sales figure, adding back your balance that you have subtracted, and subtracting the balance at the beginning. And then you are going to get this amount that you are looking for. Then you are going to record it here, and you look for the figures above. I hope this assists, because this amount, there are many ways in which you can calculate them, which is the cost of production of finished goods. I hope it is going to assist you even next week, because sometimes you won't be given this 79 rands as the cost of production. It is not always done like this. The questions that you will be given are different. So they are different question papers. It's June 2026. The examiners will be coming with new questions. You work with the information that you are given. What we are teaching you here is not what is going to be in the paper, but we are training you in answering these questions. But it doesn't mean that whatever that we are doing here will come exactly in the question paper. All right, moving on to the next question. We are done with the production cost statement and also those further explanations. Now, the questions that may follow will be the questions where you will be required to comment. By this is the questions that I like in manufacturing, because that's where you get to talk about the numbers that are given, but not the numbers that you'll be calculating. In the first part, you're calculating numbers. The second part, you are analyzing and talking about those numbers and commenting, right? So you don't leave a space here, but make sure you understand what these numbers mean. So it's Kayla's Hiking Gear Store. Okay, Kayla's Hiking Gear Store. The business owned by Kayla Kotsi makes hiking bags, and they also make hiking jackets. Then it says notes. Don't ignore this part here, this box. Where comments and explanations, or where comments or explanations are required, this is what you must do. You must quote calculations, figures, or trends. You must give a reason or an explanation in each case. Let's start with what is required upon, which is the hiking bags, 3.4. Okay, 3.4, hiking bags. What is it that is required from us? Okay. Comment on the control over direct material of hiking bags. Quote figures and give reasons that may have contributed to the change in the unit cost. Now, let us go and see the hiking bags. What happened to the direct material cost? Here is our direct material cost under variable cost. All right, direct material cost increased from 230 to 320 rands per unit. All right, that's what we must do, Lapayana, because it's comment on the control of over material code figures. Okay, direct material. Direct material cost increased from 230 rands per unit to 300 and, okay, let me confirm again, to 320 rands per unit. Okay, right. So this is what you can say. The comment on the control of hiking bags over direct material. So it's a buy. How much? Lapha? Ngasho ukuthi 320 minus 230. It's by 90 rands, or you can look for a percentage. So because it's so good, go 230 increasing go 90. So 90 over 230, then it is going to give me 39%. So it's increased by 39.1 percentage, right? Percentage points. The part that's what's good mentioned. All right, give two reasons that may have contributed to the change in the unit's cost. Right, reason number one, right? What could be the reason? Now, the material has increased from 230 to 320. What could be the reason? Because last year, material got to 230 per unit. Now, our material is 320. What caused this material to increase by 39%? It could be wastage. Wastage of material. Many things you can say here, more than 3 points that you can mention here. Wastage could be wastage of material by workers. Because if the workers are wasting material, we will keep on buying more material because they are wasting it. When they cut the fabric, or when they do whatever, this is hiking bags, or they make hiking bags. When they cut whatever material that they are using to do the hiking bags, if they are wasting it, it means we'll keep on buying more and more material. Okay. Also, this could be the change of supplier. The change of suppliers, which maybe they could be more expensive, or transport costs. Transport costs. Remember, if the transport costs have increased, we are going to pay more for material as well. The fights, the wars that is happening in those other countries, Ukraine, it is also affecting us here because those countries are known in producing oil. So if those countries, there are wars between those countries, we get oil from them. It's difficult for us because of those wars. It's difficult for us to get the oil that we need, which can push our petrol or our fuel. It can increase, and the transporting of that material is going to be expensive. So we are going to feel it. That's how this can also affect us. The change of supplier or the increase in the transport cost. The other comment that we are required to look at here, 3.5, explain whether the decision to increase selling and distribution cost of hiking bags was beneficial or not. Code speakers. Let's go and look at the hiking bags. I think it's on this side. Okay, hiking bags, selling and distribution, it's increased from 750 to 780 by 30 rands. Now, we are asked whether it was beneficial or not. Let us look at what can be affecting our nets, sorry, our selling and distribution. No, I'm talking about net profit here. I quoted the wrong amount, right? I should be quoting selling and distribution, okay? Here, selling and distribution, not selling price. All right, selling and distribution increased from 80 rands to 160 rands. This is 100% increase, okay? You can mention that, but the question is asking whether this was beneficial. So you can only get 1 mark if you are going to say selling and distribution cost increased from 80 to 160. Now, when you are asked that it was beneficial, you need to quote a relevant indicator that will prove that it was beneficial for us or it was not beneficial for us to increase our selling and distribution. How is that going to be possible for you to do? This is going to be the first part here, the one that you are going to look at, the net profits or loss. Selling and distribution, if it's increased, it means that the cost of selling and distribution is going to be increased. The aim is to increase our profits. Now, if we have a decrease in profit, then we have a problem, because as you can see here, our profits decreased from 531, or in 2023, we made a profit of 531,916, but in 2024, we made a loss of 21,120. So why is it a loss this time, whereas our selling and distribution increased? So it was not beneficial. That's what you can mention here, right? They are saying it was not beneficial. Reasons that we are going to mention here is that selling and distribution cost, selling and distribution cost increased from 80 rands per unit to 160 rands per unit, all right, by 80 rands or by 100%. So you expect that you get a profit, a very big profit, because our selling and distribution increased, right? Net profit. That's correct, Japan. Net profit. Net profit was 531,916 in 2023, whereas in 2024, we had a net loss of about 21,120. 21,120. So this was not beneficial. You get 3 marks. Right? So if you're only going to mention selling and distribution cost, you are going to get only 1. The other one that you can mention, if you do not choose net profit, you can also talk about the break-even point. The break-even point increased from 2,273, the units that you need to produce and sell. They've increased now from 2,273 to 4,328. So this means that it was not beneficial for us to increase selling and distribution cost, because now we have to produce and sell more units in order for us to break even. Okay, the next question. The next question on this one was hiking jackets. Yeah, hiking jackets, which is 3.7. Comment on the fixed cost per unit of hiking jackets. Now, this is not like hiking jackets. Comment on the fixed cost per unit of hiking jackets and explain the major cause for the change in this cost. Explain the major cause for the change in this cost. Right? Right. Okay, wait, did I write this one here? Oh, there was a question here which we skipped, which is 3.6 before we move on to 3.7. Okay, 3.6. I'm sorry about that one. Kayla plans to increase the production of hiking bags by an additional 2,500 units over the next financial year, assuming no change to the current cost structure. Calculates the additional net profits that she could expect to earn in 2025. Additional units, how many? 2,500 over the next year, assuming that no change in the current cost structure. Basically, calculates the additional net profits that she could expect to earn in 2025. Okay, so we say 2,500. We must multiply it by the marginal income or the contribution per unit. Marginal income or contribution per unit. Now, our selling price is 780. So 780 minus variable cost, which is 615. I'm getting 165. So when you say 165 times 2,500, you are going to get the profit that this person is going to expect. It's going to be 412,500. But let's remember that they made a loss again this year of 21,120. So we have to subtract that loss that they've made so that we can be able to calculate the net profit that they could expect. Because if they are going to, they're assuming that no change to the current cost structure, they are still going to make a loss next year. So they will make a profit of 412,500 and minus the loss they've made in 2024 if they choose to keep the current cost structure. So how much is going to be their profit? 412,500 minus 21,120. It is going to be 391,380. This is going to be their profit, by the way. Okay. Moving on to the next one. The next one will be, the next question will be 3.7. Now it will, this is hiking jackets. Hiking jackets. What are the questions on this one? Comment on the fixed cost per unit of hiking jackets and explain the major cause for the change in this unit. The major cause for the change in this unit, which is the hiking jacket. Now, here is my hiking jacket. Now, the fixed cost decreased, or not decreased, increased from 130 per unit to 196. That's what you can mention, right? The fixed cost per unit increased from 130 rands per unit to 196 rands 50, right? Yes, per unit. Per unit. Right? This is due to, let's go and check the number of units. Right, the number of units decreased, as you can see, my hiking jackets, from 6,000 to 4,000 units. Okay? When the number of units decrease, even though the number of units decrease, they do not necessarily affect in total fixed cost, total fixed cost, but they affect the fixed cost per unit, and we call that these economies of scale. So, well, this is due to the decrease in the number of units produced. by ubani, by 2,000, which was ubani 6,000 minus 4,000 produced in the current year. Then you can mention these economies of scale. So they do not enjoy economies of scale here. That's why we say these economies of scale, because they produced units that are less now by 2,000. So they do not enjoy. If they had produced more units, they were going to see this fixed cost decreasing. Fixed cost per unit, it was going to decrease. So this is going to be your answer for 3.7. And then let's look at 3.8. The next question on 3.8, identify the production cost of hiking jackets that should be of serious concern. Serious. So that means you don't choose any other production cost here, but the one that should be of serious concern. To Kyla, you provide 2 valid reasons, right? There are many production costs, Lapana, under hiking jackets. Now we're looking, let us look at this one, direct material. It's not a serious concern, increased by 1 rand only. But look at direct labor cost of the hiking jacket. It's increased from 110 to 175. The first question said you must identify. It is direct labor cost. Direct labor cost. We've identified it. Direct labor cost increased from per unit from 110 to 175. From 110 rands per unit to 175. By how many percent? 175 minus 110 is equal to 65 over 110. Then it gives me 59%. By 59%. This is very big. This is direct labor, right? It's increased. Provide 2 valid solutions to this. Okay, you can also try and upgrade your answer here by mentioning Uguti, whereas the production per unit decreased, direct labor increased while the production decreased from 6,000 to 2,000. Provide 2 valid solutions to this problem. Now, if direct labor increased, what's it that you can do to ensure Uguti this does not become a problem? So, number 1, the solution can be that we monitor in overtime. Monitor workers during overtime, monitor overtime, or monitor workers during our working hours. Because it could be that our workers, they do not work and during normal time, but then they end up working or having to work more days, then we end up paying more to our workers. So monitor workers during in normal time to ensure efficiency. That's what we can do. Solution number 2, it could be any solution. Number 2, it would, like, for example, introducing new technological resources or machines which can speed up the production process. That's what else we can do. Right, done with this question, which is the cost accounting. If you need to go back to this question, please look out for Emma recorded lessons, because this lesson is being recorded as we speak. All right, the last question that I'm going to do, and then I let to Mr. Mdletshe to continue, will be stock valuation. Helen's Electronics. We're now looking at stock valuation. I saw on TikTok, there was a teacher was teaching or assisting the Payana. He referred to this as stock evaluation. Please note that this is not stock evaluation, but it is stock valuation, because we want to calculate the value of the closing stock, not evaluate. We have a word which is called evaluate, which is measuring between, is the two you measure, but we are not evaluating here, but we are valuing stock. So it's coming from the word value, right? Valuation. So Helen Woods owns an electronic shop that sells a variety of electronic products. The financial year ended on 28 February 2025. Okay, one may ask, why am I just going straight to the question? We thought there is a lesson. Our first lesson was on stock valuation. Please go back to our YouTube and you look at this if you need explanation, where we explain these systems as well as the methods, because there's a difference between the system and the method. Here we are looking at methods. All right. Helen Woods owns an electronics shop that sells a variety of electronic products. The financial year ended on 28 February 2025. Records for headphones, television sets, vacuum cleaners, and pressure cleaners are provided. So we've got, well, these are the items we are selling. The headphones, television sets, vacuum cleaners, and pressure cleaners, they are provided. Headphones, we make use of the first in, first out method. It is applicable here, required. Calculate the value of closing stock on 28 February 2025 using FIFO method, 5 marks. All right, so let us look at this one. In FIFO, we make use of the fish method. We must know how much is the value, the cost of the closing stock, right? So we need to know how many units were on hand. So here is the information, stock balances for our headphones. So 350. We want the value of this, because 1 March, 170, we have the value we're given. But 28 February, they are saying must make use of FIFO. That's why there's a question mark here. We don't know the unit's price. We are going to make use of the most recent prices to value the stock here. So it is 350. I'm unit is fully value. So I make use of the fish method like this. And then let us go to the table of our purchases and look at the information about our headphones. But before I do this, I need to update my unit, because it can happen that these units that we purchased, some of them, they may have been returned. So let's check, is there any information that can assist us here? Okay, the first information is C, which speaks on carriage. So we know that headphones are delivered to the store by Jiffy Transport at a non-refundable rate of 20 rands per unit. The carriage on purchases is not included in information B. Okay, when calculating, we must take into account the carriage for information B. Right, D, here are the returns. 80 headphones were purchased in December, were returned to the suppliers. So that means now we no longer have 320, but we have 320 minus 80. So how much is the closing stock here? Not closing stock, the purchases for December, since we returned. The purchase for December actually is 240. Okay, we have updated now your figures. Those were the only returns. Now, what is it that we are going to do next? We will then calculate. Okay, we will then calculate again using our fish method and say, since we are left with 350, that 240 is still on hand, not sold for December, okay? Because we are left with 260. Then if you say 350 minus 240, you have 110. So the 110 is from here, okay? From September 2024. So for 240, we'll make use of 140 price. For 110, we'll make use of 135. Remember, they spoke about carriage. Carriage was 20 rands. So I will say times 110 Okay, for the first one, 140 plus 20, 140 plus 20, that will be 160. So 240 times 160. It's giving me ubani 38,400. This is the price I will use. For 110, I make use of this price here. Why? Because all these units are on hand. So I go up because P4 uses bottom up calculation. You assume that the units bought first are now sold. So the next one is 135 plus 20. It's 155. Right. So multiply by 110 and 35 plus 20. Then okay, answer 110 times 155. It is giving me 170,000. Oh, sorry, 17,050. And then you calculate, you add the two amount 38,400 plus 17,050. The answer is 55,450. This is the cost of on hand for our headphones. All right. Then the next question. Remember, we read the question from the question paper, not from the answer book. So this is why I go straight to the answer book. Helen decided to change the suppliers in September 2024 after receiving advice from her sister, the store manager. Provide 2 points that show her customers are unhappy with the quality of the headphones purchased from the new suppliers. Ama headphones abekho happy ngawo. Yini khombisa lokho ukuthi ke they are not happy with ama headphones. Number one, hila khombisa ama returns, right? 80 headphones. 80 headphones were returned by customers. Right, 2 points. 80 headphones were returned by customers. That is so our 80 wonke ama headphones abuyile. The next one, okay, ama sales. Let's look at the sales. From 1 March 2024 to August 2024, we sold the 680 headphones. But from 1 September 2024 to February 2024, after changing a supplier, we only sold out 310. So in a space of 6 months, the sales of cell phones decreased. So this also shows customers were unhappy. So from 1 March, I think it was 1 March. Yeah, from 1 March to August 2024, sales were 680. Sales were 680 headphones. This decreased to 310 in the last 6 months. This shows poor quality. No, 6 months we sell 610. In another 6 months, it's decreased by 50%. So this shows there is poor quality of our cell phones. If you like, you can also talk about the figures. Our sales were 149,600 in the first 6 months. In the second 6 months, they were 68,000. It shows that these figures are going down. We are losing our customers because of selling those headphones. All right. Another question here, which was asked, was what advice would you offer or would you give Helen about changing the supplier in future? Provide 1 point. Right. Firstly, they must do background check. Right. Do background check of the suppliers before buying in bulk. Another point would be to do what? To do market research. Do market research first. Do market research and get customer feedback. Because the market research will show what customers don't like it, and then you won't buy from. So this is what you need to do when you want to sell to your customers. Right, another one, television sets. The stock of television sets is valued using specific identification method or stock valuation method. The business sold two models, which is Quantum and Crystal, from 1 March 2024, the beginning of the financial year. A new TV model, Limpid, was introduced on 1 December 2024. Our year, remember, is ending on 29 February, or sorry, 29 February, 28 February. Our year is ending on the 28th February 2025. Okay? So we introduced this one in the last 6 months, December, January, and February. Limpid was introduced on that date to replace Quantum TV model. Required. Calculate the closing. Remember here we're using Ubani, specific identification. Calculate the closing stock of the television sets on 28 February 2025. 9 marks. So what are we going to do, Gelapayana? 9 marks. We need to know the TV model that we are selling. How many items were in stock at the beginning of the year? How many items were purchased? How many items were returned? How many items were sold? And then we get the number of closing stock, and then we multiply by the price. So this is what we're going to do. For Quantum, the space is shaded in gray. So that means we will not write on this space. Now, if you see a space like this in an exam, please do not write anything, because they mean do not write anything under the shaded space. Okay, let's look at Crystal. Crystal opening stock for Crystal. Okay, I think it's down there. Opening stock for Crystal. It was 72. Now, say 72. Plus, what was purchased? Crystal. Purchases, we purchased 186. 186. We look for anything that speaks to returns. There is nothing on this page that speaks to returns, okay? But there is sales of Crystal, which is 225 minus 225. The answer is 72 plus 186 minus 225. I'm getting 33. Then you can multiply by the cost price. The cost price for Crystal is 6,500. As the word suggests, specific identification. So we use the specific price. So 33 times 6,500 is giving me 214,500. Limpid. We don't have opening stock for Limpid. Why? Because Limpid was introduced to go 1 December. So we are going to take opening, not opening, but purchases, 115. So 115 minus what was sold for Limpid. We sold 94 Limpid TV sets. So 115, no returns were mentioned. Minus 94 is equal to 21. Let's look for the, what is called, the price for Limpid. The price for Limpid is 7,200. And then you say 21 multiplied by 7,200. Okay, 7,200, I'm getting 21 plus 7,200, I'm getting 151,200. Then our total will be 214,500 plus 151,200. 214,500 plus 151,200. That is giving me 365,700. Then that's how you'll get your 9 marks for this one. Okay, the answer here, 215,500. Okay, what are they saying, Lapana? Donations, the donation of TV sets to local school. We were supposed to read this before. Okay, unfortunately, this was not part of the calculation. Helen donated the unsold Quantum TVs to local high school. They were donated, unsold. Now let's calculate how many were the unsold TV sets. I mean, for Quantum. Remember, we opened with 123 for quantum, and then we bought, nothing was bought, but we sold 105, which leaves us with 18. So we donated 18 quantum TV sets. Okay, right. So looking at another question for this one, it says, okay, we've calculated number 3.4. We now move on to 3.3. We now move to 3.4. Helen was not satisfied that she was selling an average of 19 crystal TV sets per month. However, she is happy that new Limpid TVs, despite its higher selling price per unit, is selling at a quicker rate than Crystal. Calculate the cost of sales of Limpid TVs. Now, what is going to assist us here to calculate cost of sales is to see the amount, no matter the number of sold TV sets for Crystal. No. What is it? Limpid, yes. It's 94. We sold 94. Now we'll apply. All right. It is 94 multiplied by the cost of Limpid, which is 7,200. So 94 times 7,200 is going to give us 676,800. 3 marks for the cost of sales of Limpid, because it's very easy to calculate cost of sales with specific identification. You just take the model number of units sold multiplied by the cost price that is given for that model. But with your FIFO, your weighted average, you will have to take opening plus purchases plus carriage minus returns minus closing, then you get your cost of sales. It's much easier on specific because you take sold times the cost price, then you get it. Simple. Calculate how long in days it will take to sell the closing stock. This is not asking us to do average stock, but how long in days it will take to sell for Helen to sell the closing stock of Limpid TVs. I know that your method of calculating how long it will take stock holding period, you would say average stock, but here it says closing stock. Average stock over cost of sales times 365. But be mindful that Limpid did not stay with us in the business for the rest of the year. It came when? Go 1 December for 3 months. 1 December, okay, December, 1 December, January, and then February. 3 months. This is equal to 90 days in total. 3 months, 30. That is 90 days, right? So let's calculate here again. But say how long it will take to sell the closing stock. So don't use average stock, opening plus closing. But what you have to use here is only the closing stock for Limpid. We have calculated the closing stock Limpid to be 151,200. There are 2 ways in which you can do this. Firstly, you can use 151,200 here as the value, and then over cost of sales 676,800. Then multiplied by 90, not times 365, because this model was introduced in December. So 151,200 times, over 670,800, right, times 90. I'm getting 20.1 days. 20.1 days. No, this is how else you can calculate it. You can say, firstly, take the units, right? No, the units that were on hand for Limpid. They were 21, right? So 21 over number of units sold, 94, multiplied by 90 days. We can't say 365 because if you go December. So 21 over 94 times 90. It is giving me 20.1 days. This is also how you can do this. Here's how you can do it. Okay. Helen feels that she has made a wise decision by replacing quantum TVs with limpid TVs. Give one possible reason with figures to substantiate her opinion. Right. Now, what you can do here, ngoba kuthiwa ufile ukuthi wenze kahle ngokureplace i-Quantum with TV with Quantum TVs with limpid TVs. One possible reason for this. Let's begin uQuantum. Okay, sales. Right, uQuantum was there since the beginning. Let's calculate the average sales per month for Quantum. 105 divided by 105 divided by ubani 105 divided by 12. 105 divided by 12. I'm getting 9 laphayana. Goba, this is going to be the average sales per month. 9, okay, that's 9 days. All right, not 9 days, sorry. 9 TV sets, the sales of 9 TV sets per month. So 94 divided by 3. If you say 94, in 3 months, sold 94. That's going to be 31 TV sets. Okay, 105 divided by 12 is going to give me 9, and then 94 divided by 3 is 31. So that was uQuantum. So one thing I think was uQuantum. So our answer here is that we can say average sales for Quantum was 9, and Limpid, the average sales per month is 31 TV sets. So per month they're selling 31 TV sets, meaning that customers are welcoming it nicely since it's a newer model. All right, moving on to the next question. Also, you can mention a point where they had to sell, they had to sell, they had to donate 18 TV sets for the Quantum. All right, the last question, 3.5. Refer to information D. Explain how this will have a positive effect on the business. What is information B? What is it saying? Information D. I think it is about that sale, donation of television sets to local schools. Helen donated the unsold TV set to local schools, right? Now here you can say impact, positive impact of this. It will increase the money, the image, or will have a good image of the business, or will have a good publicity because of donated TVs. Therefore, we'll get more customers, right? Yeah, so to donate, it's also going to have a good publicity, right, of your business. Okay, let me give Mr. Mdletshe. Mr. Mdletshe now has got only 40 minutes to do the other questions, which is going to be reconciliation, bank reconciliation. It's a very short question, as well as debtors reconciliation and the creditors. Okay, thank you.
Thank you, Mr. Matuna. Good evening to everyone who's part of this lesson. Without wasting much time, let us shoot straight to the bank reconciliation. So we are required to do the bank reconciliation and debtors reconciliation for 30 marks. We have 25 minutes. The information relates to Scott Traders owned by Scott Salazar. The business receives the official bank statement on the 25th of each month. So the reason they give you this information, you should be careful. There will be transactions that are going to occur after this date. So you should take into consideration on which date of the month do we receive the bank statement. Required, calculate the correct bank account balance on 31 May 2024. Calculate the correct balance on 31 May 2024. Then this is our information here. They say the bookkeeper calculated the provisional bank balance as a positive 9,050 on 31 May 2024. So as you can see, we are already given the balance at the end of the month, but this balance was before we received the bank statement. They say he calculated this before receiving the May 2024 bank statement. So there may be transactions which are going to appear on the bank statement, but not included in this balance. So we have to correct the given balance. We are not calculating from scratch, whereby we are going to add our receipts and then minus our payment. But in this case, we are already given the balance as 9,050, but we have to effect all those transactions that will occur or appear on the bank statement, but not on our books. Okay? So already we know that we are correcting an amount of 9,050. Information P, we are given the reconciliation statement for the previous month, which is 30 April 2024. This is the reconciliation we prepared as a business and requested the bank to effect these outstanding deposits and outstanding EFT. So before we even try to reconcile this month's balance, we have to go and check if the request we made to the bank on 30 April 2024 were effected or not. So let's see what happened here. Note number 1, they say the deposits on 16 April 2024 for 4,000 and EFT 6 number 32. Deposits on 16 April, there it is for 4,000, and then EFT number 632 for 7,800. There is EFT number 632 for 7,800 were reflected on the May bank statement. So what does this mean? This means we'll no longer do anything with this amount, because previously we requested the bank that we have these deposits of 4,000 and EFT of 7.8 appearing on our cash journal, but not appearing on the bank statement. So we then prepared this reconciliation. We sent it to the bank and say, we don't see this amount on the April bank statement. We then requested them to show. Then they say they were reflected on the May bank statement. So for these two amounts, we'll not be doing anything. Then next, the deposits on 26 April 2024. There is that deposits on 26 April for 15,000. Appeared as 10,000 on the bank statement. Full stop. It appeared as 10,000 on the May bank statement. But if you go back to the reconciliation, we said there is an outstanding EFT of 15,000, outstanding deposit of 15,000. But now this deposit is now appearing as 10,000 on our bank statement. Then they say the cashier at that time was dismissed for theft, and this amount has to be written off. So there was theft committed by our cashier. He was supposed to deposit an amount of 15,000, but only 10,000 was reflected on the bank statement. So now we have to cancel the difference. In this case, it will be 15,000 minus 10,000, which is going to give us 5,000. Then how are you going to cancel? Remember, when you prepare journal, you cancel on the opposite journal. So this amount appeared on the CRJ, meaning it increased our bank account. It increased our bank account by 15,000. But now, because only 10,000 was reflected, we have to decrease our bank account by 5,000. So it will be minus 5,000. And then next, they say EFT number 633 appeared on the May bank statement with the correct amount of 4,000 4,508. EFT number 633 appeared on the May bank statement with an amount of 4,508. But if you look at the reconciliation, we said there's an outstanding EFT of 5,408. But when it's appear on the bank statement, it's 4,508. So this means that us as a business, we overstated this EFT on our CPJ. We overstated this EFT on our CPJ. Then you need to correct there by finding the difference. When you say 5,480 minus 4,580, you have a difference of 900. Then what are you going to do? Remember, this transaction was initially recorded on the CPJ because we were paying it an EFT. So because now we have overstated our payments, to correct this, we must add back this amount of 900. So we're going to add back 900 in order to cancel the negative 900. It was overstated when we minused 5,408. Okay, moving on your information. Information C, a comparison of the May 2024 bank statement with the cash journal revealed the following. A comparison between our books and the bank statement revealed the following. Roman figure 1, bank charges on the bank statement only. Bank charges on the bank statement only, meaning they did not appear on our cash journal. Remember, every time the bank decide to charge us for their services, they will not tell us every time they decide to charge us. If we make transaction, there is a service fee, all those bank charges, they will not tell us, but we'll only be able to see that when we receive our bank statement toward the end of the month or at the last day of the month. Then we had bank charges to the amount of 310. Bank charges will have a negative effect on our bank account, so you are going to minus 310 there. Moving on, Roman figure 2, a debit order for advertising of 1,780 was not recorded in the CPJ and was duplicated on the bank statement. A debit order for 1,780 was not recorded in the CPJ. Let's first start by recording it. It was not recorded in the CPJ. It's a debit order, meaning money is going out of the business or our bank account is decreasing. So we're going to minus 1,780. Then they say this was duplicated on the bank statement, meaning there were two debit orders for 1,708. Then they say the bank will correct the error next month. What does this tell us? This tells we need to show this on our BRS, which is the bank reconciliation statement. The statement that we prepare in order to correct all errors and omissions that are committed or made by the bank. Maybe let us do that again in order to try and save time. This is the structure of your bank reconciliation statement. I prefer to use the 2 column. Here you'll have your balance as per bank statement. Here you'll have your balance as per bank account, the one we are required to calculate on information number 1.1.1. So they say there was an error by the bank. They duplicated debit order, and this error will be corrected on the next month. Even though they say it will be corrected on the next month, but you are still going to show it on this month bank reconciliation statement because we want our figures to be realistic. So we'll have correction of an error. Remember, as we are preparing the bank reconciliation statement, we regard ourselves as a bank, meaning our bank balance is going to increase on the credit side and decrease on the debit side, because to a bank, we are like a liability because we take our money, then we give it to the bank. So the bank owes us. So that's why they increase on the credit side and we decrease on the debit side. So because it was a debit order, meaning they deducted twice an amount of 1,708. So we are going to add back on the credit side an amount of 1,780 because we want to cancel the double deduction that they made of this amount of 1,780. Moving on to Roman figure 3, they say the bank statement reflected a direct deposit into the business bank account of 25,000. This is an error by the payer. The bank will reverse the entry next month. So on our bank statement, when you received it, on the credit side, there was an amount of 25,000. But now we are told that this was an error. This amount doesn't belong to the business. It's not ours. But they say the bank will reverse the entry next month. Again, even though they indicated that they will correct the error next month, but we are going to show this in the bank reconciliation statement in order to make sure that our balances at the end are the same and they are realistic. So again, it's a correction of an error there made by the payer. So this deposit of 25,000 appeared as a deposit, meaning it was on the credit side. So in order to cancel this, we are going to record on the debit side. So we will have 25,000. We will not do anything in our books because this only appeared on the bank statement and it doesn't belong to the business because this was an error. So you'll only correct on the bank reconciliation statement. Number 4, they say interest on fixed deposit of 1,060 appeared on the bank statement, but not in the journals. You have to be careful. Remember, interest is divided into 2. It can either be an income to the business or an expense. So in this case, it is an interest on a fixed deposit, meaning we are receiving this interest on the amount we have decided to invest as a fixed deposit. So this is going to increase our bank account 1,060. So we are going to add 1,060 because we are receiving an interest, which is an income to the business. A deposit of 17,500 appeared in the CRJ dated 27 May 2024. Appeared in the CRJ dated 27 May 2024. When we started this question, I did indicate that if they indicate that we receive the statement on the 25th of each and every month, so all those transactions that will occur after the 25th, they will not be appearing on the bank statement. Just like this deposit, it was dated 27 May 2024, and we received the bank statement on the 25th of May. So we are going to show this amount in the bank reconciliation statement. Because the deposit is going to appear on the credit side. Then you are going to have outstanding deposits of how much? 17,500. 17,500. You are advised to do your correction of the bank account balance and your BRS simultaneously in order to try and save time. So every time you come across a transaction, you just go straight to the BRS. If it requires you to calculate the bank balance, you go straight to the bank balance so that you try and save time. EFT number 819 for 11,880 was recorded in the CPJ on 28 May 2024. Again, this transaction occurred after the 25th of May 2024. So because an EFT appearing on the CPJ, it's going to decrease our bank balance with 11,880. It's your outstanding. EFT of 11,880. 11,808. Then last, they say the May bank statement reflected a balance of, it's unknown, so it's going to be a balancing figure. So from there, you can now determine your correct bank account balance, so that you are going to use it in order to find the balance as per bank statement. So it's 9,050 minus 5,000 plus 900 minus 310 minus 1,780 plus 1,060. Then you're going to get your correct bank balance to be 3,920. You take the same balance. Remember, if it is favorable there, it's going to appear on the debit side because you bring this balance down as it is. So here you would have 3,920. Then we can now determine this balancing figure, which is the balance per bank statement, by determining the bigger side. By the look of things, you can see that the debit side is bigger. You have 11,880 plus 25,000 plus 3,920, which is going to give you 40,800. 40,800. Then you can work backwards to determine the balance as per bank statement. Then you have 21,250. It's going to be 21,250. This is a one column structure. If you are comfortable with using it, then you can use it. Next, we have information 1.2, debtors reconciliation statement. Debtors reconciliation statement. Did I leave out something here? Let me check. Oh, we have 1.1.3. They say Scott has been convinced by his bank manager that he should use online banking for his business, particularly as the business makes payment easier through the use of EFTs. Scott is planning to employ Kiki as to be responsible for all matters relating to online banking. Then they say, explain two important instructions that Scott should give to Kiki to ensure that corruption does not occur. So Scott is now convinced to move to online banking. So that is going to use EFT for paying and also receiving money. And then they say, explain two important instructions that Scott could give to Kiki to ensure that corruption does not occur. So the first point that we may say there is that all EFT payments should be authorized by Scott or by senior management. So before Kiki can make a payment, all those EFT payments, they must be authorized. Then the second point, you can say, request SMS or email notification on all transactions. We can request from the bank that we receive an email or an SMS every time there is a transaction requesting us to pay, or when we receive money from our debtors, or any type of income that we receive through the use of an EFT. Okay, moving on to the next question, which is 1.2. Debtors reconciliation. Sydney Stores, the general dealer selling groceries for cash and on credit. Required, calculate the correct balance for each debtor on the list provided. Negative balances must be shown in brackets or with a minus sign. So you can see, we are not reconciling between our debtors control and debtors list, but we are only calculating the correct balance for each debtor. So we're just updating our debtors list there. For 12 marks, information, extracts of the debtors list before errors and omission. Mr. Matuna did explain the difference between the two, an error and an omission. So these are our debtors. We have HUD, P. Pinia, C. Olivia, and D. Ferry. Then these are their balances. First thing first, because we are correcting those balances, they must appear, or already they have been inserted for us on the answer book. So we just shoot straight to the errors and omission. Number one, they say a receipt of 9,000 from Judy was posted in error to the debtors ledger of Bina. A receipt of 9,000 from Judy was posted in error to the account, to the debtors ledger account of Bina. So first thing you should be careful of, always check the source document use. Always check the source document use. When it comes to debtors, you would see an invoice which is used for selling. So whenever a debtor buys on credit from the business, we are going to use an invoice. The next source document you will see it's a receipt. Whenever our debtors are paying back what is owed, then you can also see the credit note. Whenever a debtor decides to do what? To return some of the good. You can also see your general voucher whenever there is a transfer of a debtor from creditors ledger to debtors ledger. So in this case, you are told that's a receipt. So a receipt has which effect on the balance of a debt? So because a debtor is paying us back, his or her debt must now decrease. So a receipt of 10,000 from Judy was posted in error to the account of Pippen. So instead of decreasing the account of Judy by 9,000, we decided to decrease the account of Pippen by 9,000. So what we must do, we have to add back 9,000 to the account of Ubani. Add back 9,000 because we subtracted even though Bernard did not pay us any amount. And then Judy did pay 9,000, we must minus 9,000. This is how you deal with this transaction. Roman figure 2, goods returned by Ferry for 7,100 appeared correctly in the DHA. This is the journal we use to record all the return. This, however, was posted as 710 to his account in the debtors ledger. Again, Ferry decided to return good back to the business. When a debtor returns good, we must decrease his or her debt. So Ferry returns good to the value of 7,100, but this was posted as 710. So we understated our returns there. So instead of minusing 7,100, we minused 710. So what we're going to do there, find the difference between these two amounts. The difference is 6,309. So that means we must also minus this amount because we have understated the returns of 7,100 by 6,309. So we go to Ferry, we say minus 6,309. Okay, moving on. Number 3, an invoice for 3,000 to Oliver. Again, an invoice. What does this mean? Oliver was buying from us on credit. An invoice for 3,000 to Oliver was correctly recorded in the DJ. This is the journal we use for selling on credit, debtors journal. This, however, was erroneously posted as a receipt to his account. This was erroneously posted as a receipt to his account in the debtors ledger. So every time a debtor decides to buy on credit from us, we must increase his or her debt. So Oliver made a purchase of a value of 3,000, but we recorded this as a receipt. So instead of adding 3,000 to his or her debt, we minused because we recorded this as a receipt, and receipts have a negative effect on the balance of a debtor because he is paying us back, so his or her balance must now decrease. So in this case, the first thing we're going to do, we must cancel this receipt by adding back 3,000 to the balance of Ubani, of Olive. We are going to add back 3,000. The first 3,000 we're adding is for cancelling this receipt, because instead of minusing, we decided to add 3,000. Then again, we now record the correct transaction. We are now going to record the transaction. So we are going to add 3,000 twice there. So it would be plus 3,000. This first 3,000 is for cancelling the amount that was added, that was minused by mistake. And then again, we add to 3,000 for recording the correct transaction, which is an invoice made by Olive. Okay, then last they say, during a sales promotion at Sydney Stores, this is us. During a sale promotion at Sydney Stores, Oliver bought goods on credit for 2,400 after being granted a trade discount. Remember, a trade discount is when we allow a debtor to buy at a smaller amount. So because we're having a sales promotion, we allow to see Oliver to buy at 25% less. Then we are told that the value was 2.5 after being granted, meaning after we have subtracted the trade discount of 25%. So this means that this amount of 2.4 now represent 75% of the full amount. Okay. However, the bookkeeper entered the gross amount in error to the DJ and posted this accordingly to the debtor's ledger. So we decided to say, no, Oliver, because you are having a promotion, you can buy it 100% minus 25%, then the total was 2,400, meaning this amount is now 75%. But our bookkeeper recorded the gross amount, meaning recorded the full amount, which is now 100%. So the bookkeeper did not record the trade discount. So we should take into account the trade discount. How are you going to get that? You say 2,400 multiplied by what you want. What are we looking for? We are looking for a discount of 25%. And then what do we have? We have 75%, which is 2,400. We have 75%, which is 2,400. Then that is going to give us 800. Then what's going to happen with this amount? We must decrease for a account Gabani, Oliver, because he did receive a trade discount. So from Oliver, we say minus 800. Then from there, we can determine the corrected balance. 27,750 minus 9,000. We have 18,750. Then for Upin, it was negative 4,000 plus 9,000. Give us 8,600. Oliver, 19,300 plus 6,000 minus 800. We have 24,500. Then for Ferry, it's 2.9 minus 6,390. We have 3,490, which is negative. Then this is how you were to do the correction of your debtors reconciliation. Okay, moving on, let us look at the creditors reconciliation now. Let us look at the creditors reconciliation. We try to move fast because we have less than 10 minutes remaining. All right, without wasting much time, what are we giving there? Ipsim Traders receive a statement of account from a creditor, which is Canon Suppliers. So Ipsim Traders, it's the name of the business, which is going to be us in this case. And then Canon Traders, we just say it's them or it's the supplier. The balance on this statement did not agree with that on the account of Canon Suppliers and Creditors Ledger of Epson Traders. So the two balances did not agree. Then we know that we must reconcile and make these two balances to be the same. Refer to information A, B, and C. Use the table provided to indicate the changes to the creditors ledger account in the books of EPSIL and the statement of account received from Canon suppliers. So when you look at your answer book, already the pre-amount or the incorrect balances have been entered for you. You have the creditors ledger account of EPSIL. You can indicate there and say, this is us, the business, because we are the one who prepared the creditors ledger. And then this is them because this is where we received the statement. Remember, this is our supplier, which is Canon suppliers. So at the end, these are where the two balances that we had, 101,900 and 88,900. So we have to correct those two balances. They say write the amount and indicate a plus for any credit, a plus and a decrease with a minus with each amount. Information A, you are given the creditors ledger of EPSIL Traders, which was prepared by us, the business. What you should be careful of here, because Canon suppliers are a creditor to us, so meaning they are a liability. So every time a transaction occurs between us and them, we are going to increase our balance on the credit side, and we are going to decrease on the debit side, because the liability increases on the credit side and decrease on the debit side. So every time we buy, you record the credit side. Every time we return or pay, we record on the debit side. But for Canon suppliers, when they prepare their books, they will do the opposite, because to them we are a debtor. So they are going to increase our debt on the debit side and decrease on the credit side. So it's going to be a vice versa. So our debit side must correspond with our credit side, and our credit side correspond with the debit side. All right. C, we're giving the difference is noted. Number one, they say Canon suppliers correctly levied interest of 400 on the account of EPSIL Traders on 4 March 2025. So there was a case whereby we weren't able to pay in time, and then they decided to charge us interest of 400 on 4 March 2025. So let's go back to our statement and see. As you can see, on the debit side, they increased the balance by 400. But when you go to our books, on day 4, there is no recording of that interest. Again, the reason is that we only received the statement at the end of the month. So they didn't tell us that they are not charging interest. So we are only seeing the interest as we receive the statement from them. So we have to increase our debts there by 400, because we are being charged the interest for late paying. Okay. Number 2, invoice 519 on 6 March was correct according to the statement received from Canon. Invoice number 519 on 6 March. Let's go and check. Invoice number 519, we have 23,600. This is the correct amount, because they say the statement is correct, meaning their books as our supplier is correct. But when you go to our ledger, invoice number 519, we have 26,300. What happened there? Because it's an invoice, it means we were buying on credit, but we overstated the amount of the invoice. We overstated the amount of the invoice. So let's find the difference, and then we decrease our debt, because if you overstate an invoice, you are increasing what you owe. So 26,300 minus 23,600. Then we have overstated by 2,700. So we are going to minus that amount of 2,700 there, because we, as the on our ledger account, creditors ledger, the amount was incorrect, but it was correct according to the statement. Number 3, Canon suppliers made an error in recording the return of goods on 8 March 2025. So our suppliers made an error according to the return of goods on 8 March. So there is 8 March, you have your credit note of 164, which is value of 1,600. But as you can see, this return is appearing on the debit side. But we said debit side is used for increasing this balance. So when we return back goods to the supplier, they must decrease our debt by 1,600. But in this case, they decided to increase our debt by 1,600. So to correct this, we'll first minus 1,600. Why are we minusing? We want to create a zero by cancelling this 1,600. Then again, we minus 1,600 because we have made a return. So we are not going to pay for those goods because we were not happy with them. Maybe they were damaged. And then we decided to return them back to our Canon suppliers. So you'll have minus 1,600 minus 1,600. All right. Moving on to number 4. They say absent traders, which is us, the business, qualified for an early settlement discount with the payment on 14 March 2025. So we decided to pay early. You remember, as part of internal control, when they say what we can do to encourage our debtors to pay on time, we say we'll give discount on early payments. So in this case, we qualified for a discount on 17 March. Then now they say Canon suppliers granted only 5,000 as a discount. They promised to show this on their statement next month. Same thing as we're doing the PRS. Even if they say next month, but because we are doing the corrections now, we are going to show this adjustment because we need the balance to be realistic. So they say we only qualified for a discount of 5,000. A payment made on 14 March. Sorry for that. A payment made on 14 March. When you go to 14 March, we made a payment EFT number 310, then a discount of 7,000. So we have given ourselves a bigger discount than what we were supposed to receive. We were supposed to receive a discount of 7,000, of 5,000, sorry, but we recorded 7,000. So we need to add back this amount because a discount has a negative effect on the balance because we're not going to pay this amount. So we have over subtracted our discount. So we must add back 2,000. We must add back 2,000 because we only qualified for a discount of 5,000, but we recorded 7,000. But they say they will also show this on the next statement, meaning how much are they going to show? Is it 7,000 or 5,000? They will show the correct amount, which is 5,000. They will decrease our debt by 5,000 because they've given us a discount of 5,000. Next adjustment. It's number 5. Invoice number 202 for 13,800 was recorded incorrectly in the creditors ledger account of Canon suppliers. So we are the one who recorded incorrectly. This invoice was received from another creditor, which is Baron suppliers. So we went to Baron suppliers to buy on credit, but in error, we then increased the account of Canon suppliers. So the statement received from our suppliers does not have any mistake. So there won't be any effect on the statement. But we must correct our books by canceling this invoice of 13,800. Because an invoice has a positive effect, we are going to minus 13,800. Right? Next, they say a trade discount of 10% was deducted on invoice 594. Okay, a trade discount, we did speak about it on the debtors reconciliation. They say Canon suppliers will correct this next month. Invoice number 594. So we went to buy invoice number 594. There it is. On their statement, it is 19,000 because they did not take into account the 10% trade discount. But in our books, we have 17,100, meaning this amount is now 90%. But they recorded 100%, which is the full amount before subtracting the trade discount. So for us, you can say 17,100 multiplied by what you want over what you have, which is 17,100 times 10% over 90. Then you'll have 1,900. So this is the discount that they must deduct from this invoice of 19,000. So our balance, according to them, must decrease by 1,900. Right? Then the last one. They say invoice 610 did not appear on the statement received from Canon suppliers as this transaction took place after their statement date. So we did talk about this on the PRS. That's the transaction that will occur after we have received a statement. So on the last day of the month, there was invoice 610, meaning we were buying on credit for 9,000. But this does not appear as the statement is dated the 25th of March 2025. So we just need to increase our balance on the statement by 9,000. Then from there, we can check if the two balances do match quickly. 2.7 plus 12,000 minus 13,800. We have 87,800. Then this side, it's 88,900 minus 1.6 minus 1.6 minus 5,000 minus 1.9 plus 9,000. Again, we have 87,800. Okay, we'll love to continue, but because of time, this is the end of our lesson. Remember, this is the last lesson for this term, which is term 2. We are going to meet as soon as term 2 opens, as soon as term 3 opens, where we will be looking at the topics for term 3, which is budget and value added tax. Thank you. Good luck on your paper for next week, the 24th of March.